Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap Orderflow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Also, it's based. One moment. It's also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars, and of course the Trader Lab itself, which is made up of a group of like-minded traders to come together and leverage their collective experience. There isn't one way to trade the market. However, it is important to understand how the market works, why it does what it does, and how at times to get in alignment with it. And the structured trades I've shared are based on my experience. And part of the idea of the Trader Lab and why I agreed to do it was because of the tremendous learning curve we have as developing traders, and also how much time we might be wasting chasing illusions or random behaviors that do not have a statistical edge. Most retail traders think this is a business of confirmation and certainty, and trying to create that with various indicators and timeframes. But the reality of our business is there is no certainty, there's only randomness. So if we can solve for randomness versus creating certainty, we might have a better opportunity. And this requires individual traders to do the work and determine where their edge or statistical probabilities might show up. That is really the business of trading. And most of us think that is not what trading is. We think it's just confirmation and creating certainty. If you're in an environment that's 100% random 100% of the time, same as the casinos, you cannot create certainty, but you can create edge or statistical probabilities. That's what the Trader Lab is about. And then it's about how can you use a high-tier order flow tool and put these pieces together into a cohesive, consistent process. Welcome to the Trader Lab. Thanks for coming by today. Now, let's get going. I got to take care of business. Grab a pen and paper. I'm going to give you some statistics, and I'm going to give you an overview of the condition of the market as of the close yesterday. Also, remember the Trader Lab is available to everyone. There's no cost for it. There's a link in the bottom of YouTube if you're visiting. Also, if you have questions, please post them. I'll do my best. Also, I want to remind everyone I am streaming from Costa Rica in an unstable connection, and if for some reason I have to drop out of YouTube, this stream will be posted later for you to review if you care to do that. So let's get going. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. Dan, how we doing? We're doing okay. Dan is Bookmap Support, and thank you, Bookmap Support, for being here to help with the stream while I'm in Costa Rica. And every day. Okay, thanks, Dan. All right, guys. So grab your pen and paper. Here's some statistics. Now, we opened inside of yesterday's range. Now, right after I give you these quick statistics, I'm going to go into the higher time frame because it's very important. And the thing about, quote, time frames is think of the market as fitting inside itself, like fractals, or Russian dolls is the best analogy for this. Now, you guys think of it as time frames, 60-minute, RTH, 15s, 5, whatever, however you slice and dice it. Doesn't matter. What does matter is conceptually to look at the market as it rotates on top of itself. The market typically just isn't a bullet train, though it can be. Most of the time it goes in one direction, and then who's ever on the other side potentially gets squeezed out. And it goes back and forth, back and forth. Even if it's overall moving in one direction, it's still going to rotate. Well, as day traders, if you are a day trader, you don't have to be a day trader. You could do whatever you want to do. The mechanics of the market are the same, but the quote time frame changes. Just a thought for you. So we opened lower inside of yesterday's range. Now, here's some statistics. Past performance, not indicative of future results. You need to vet everything. for yourself, no matter where you are. The probability of taking out yesterday's high or low has an 85% probability. Now, I will mention to you that yesterday at the end of the RTH session, we always have discussions in Trader Lab about what might happen. Of course, nobody knows what will happen. But the probability of taking out yesterday's high, considering what happened at yesterday's RTH low, suggested taking the high out. And of course, the market doesn't have to do that. The other possibility was today to have an inside day. So it was inside day or take out the high. Taking out yesterday's low probability, though always possible. Anything can happen in trading. Taking out either the ETH high or low, about a 93% probability. Taking out the overnight volume point of control, 83% probability. Getting back to settlement, approximately 72% probability. Getting back to yesterday's point of control, 70% probability, and I'll point these out to you along the way. Getting through the first hour's high, which is called the initial balance, about a 69% probability, and going from there. There's more, but that'll get you started. And again, you've got to vet all of these for yourself. Now let's go take a look. Let's go from here. Questions, please post them. And again, welcome to the Trader Lab. If you're in YouTube, please post any questions you have. I'll do my best. Also, remember, there's a lot of additional education available, not only in the Trader Lab, in the Bookmap server. It's all available at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, swing trading, algorithmic behavior, market maker behavior, a lot more. Also, how to use advanced trading tools, absorption, icebergs, to understand these elements, and there's just so much more. By the way, this is what the 60 PDFs that are in the Trader Lab look like. They're actual trades, but the idea of Trader Lab is I selected trades. You guys think of them as setups. I don't like the term, only because a setup indicates a mechanical process, and there's setups are not mechanical. They're more structurally based. So they qualify in certain conditions. They're not across the board. So it isn't plug and play and you have an ATM in the basement. That would be nice, but I think it's naive to think trading really would be like that. So these are actual trades. And what I've done is I've selected what I consider to be basic. Now, basic doesn't mean novice-based. Basic processes to help traders learn to understand market mechanics, how it works, and you can integrate these into a process or trade plan. That's and I won't spend any more time with this, but these are available at no cost, and a library of webinars, and of course the Trader Lab community. So let's continue along our merry way. Now, this is the RTH Open. I'm going to show it to you. Actually, I'm not going to show the RTH Open. I want to show you a higher time frame. These are RTH candles, okay? And if you just look at this, what do we see? We're in a downtrend. And we have, a correction here, a counter rotation. And you'll notice even if the market is moving directionally, it has counter rotations. How do you make sense out of this? Down, then squeeze, then down, 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 squeeze, So this is the world we live in. Now I'm going to put profiles over this just so you can kind of see what the profile might help you with. Now we can organize this into some volume. Now, what does this all say? Now, this is the all-time high, and a very quick synopsis. Volume and price are what really tells you what's going on in the market. Not price by itself, but the volume that happens at price. That's what makes the auction or auction market theory relevant. Just to pull something out of thin air here. Do you see this selling candle? Why did we go down here? Well, there's no volume up here. Think of it like this. You go to the store, the price is too high. Somebody might pay it, but if the price is too high, you have very few buyers up here. Well, what might happen then? Well, the market has to go down to find buyers. What is this orange line? The highest volume in this consolidation. Think of it like this: too high, too low, retail. And if the Now I'm going up in, as you guys think of time frames. So instead of 1 day, I'm now combining days where the volume overlaps. If this orange line, which is the highest volume in here, becomes too high, we can leave it. I'm not paying that. Just think of it like shopping. Now over here, I had another consolidation. It's a little bit off the chart. I'm not going to move the chart because we don't have time. And here's where this high volume was. Well, if I break under it, I'm rejecting that volume and this volume. Now, where do I come? I come up here, and if that's too high and I can't get back to it, I start a new consolidation. That's what these are. So too high, and it rotates. And this, of course, is day traders. We could be trading, short, longs, shorts, longs, shorts, then squeeze, then open higher, squeeze out the shorts, go down. So too high. What's over here? This is from another area. First it acts as support, then we get below it, it becomes resistance. Down we go, just so you can kind of see. Now up here, same thing. Now this here is the volume. We come back and check this one, too high. Where do we go? We go down. Now yesterday we came down, and this was the downside target, 55, whatever, 28-ish. We got pretty close. We got the, 33 or something. And this is higher time frame, so it's like horseshoes and hand grenades. There is no precision. And then where did we come back? We came back here. High of the day was whatever, 70 or 72. That's this location. Now, so I want to show you the higher time frame. So what does that do for us? Well, if this becomes too low, this is called mean reversion in a higher time frame. So outside, it's on sale, which we don't know where, any of this is, and then come back here. Now, for today's scenario, and this is not about right, wrong. There is no right, wrong in trading. There's only maybe. So the scenarios for today, and don't forget tomorrow's, tariff liberation day. There's a couple sayings, old sayings in trading. One of them is buy the rumor, sell the fact. Well, in this situation, sell the rumor, buy the fact. Now, and of course, that's for tomorrow, but the market's not on any particular schedule. So that is something that if you've been trading a while, it's kind of like the market anticipates news, and then it's relieved when it knows the news. Now, we don't know what the news will be. We don't know how the market will react. But if you've been trading for a while, there's certain things you tend to observe, and it's not predictive. What it does is it gives you a sense of possibilities, and that's all you have in trading is maybe. You might want to think about that. Maybe it'll do this. Maybe it'll do that. Then some of those statistics do come from the homework, and Investor RT is asking me, where did these stats come from? And there's other processes we use in Trader Lab to extract stats. Trader Lab, remember, is a community of traders, and data mining goes on. So yes, Investor RT has a very robust stat extraction process, but there's other processes that we do use, and this is part of what Trader Lab is about. We have some very good programmers in there and coders who will do their share, because the idea of Trader Lab data mining is that there's a lot of work to create edge. So the possibility for today was, and now the thing when I say possibilities is there's no way to know. And one of the things you'll find if you've been trading for a while, now I'm going on 46 years professionally and out here with you, is humility, because ego has no place in this business. You can't afford an ego in this business. When your ego comes in, basically you're closing off what might be the opportunities, because you'll become myopic. And you'll learn that over time. Sustainability is not easy in this business because you have to learn about your personal psychology. I mean, there's traders who, you know these traders, they basically have to tell you how right they are all the time. And then and nobody's right. It's trade plan and statistical edge. That's what's right. And every trader finds their own groove. You'll find that too. all kinds of different personalities in trading, of course. And you have to have somewhat of a personality type that wants to excel, highly motivated, and can deal with the frustrations of being in a random environment. So there's a lot of elements that go into becoming a successful career-based trader. We do work on that in Trader Lab. And trading isn't for everybody because you're going to push against your primal wiring. So the scenario for today was open, lower, and squeeze, or open, and yesterday we completed our squeeze because this is the retail price in a higher time frame. So too low, too high. So open lower, inside day, or open lower, squeeze out, take out this high because of a high probability, and then go from there. That was my scenario. But I also know the market can do anything. Now, the other issue, of course, for all of us is how. How does it do it? And there's where the joy comes in of randomness. Let me get this off of here. This is Investor RT, by the way, and it exports to Bookmap. So levels that are on this chart. Oh, I got to show you one other thing. Here. These lines are called naked volume points of control. If they're naked, that means they're out here. They're potential targets. This orange line is the highest volume in the consolidations. The yellow lines are the highest volume in the individual RTH candles. Now, let me bring you back to yesterday. Just one thing I have to show you here, and we'll move on. If I can do this. One moment. Because you guys think time frames, me, fractal. That's all. Same difference, except the clock doesn't regulate the intraday behavior. Now, let's see if we can get this right. So on this day, yesterday, 56, it's a little hard to see. I think it's 55-ish was the naked volume point of control. That's the highest retail price where the highest volume is. And that's up at near the high of the day. That is a target with approximately a 70% probability. That was part of the scenario to come here. And also, there's about an 85% probability to test yesterday's high a day. That's what kind of set up the open lower and then squeeze scenario. Come here and take this out. And then after that, it's we'll see you. Okay? I just want you to see where all these things come from. This is part of what the auction process is. Now, let's get into today's trade. Now, I'm going to say today's trade was a little perplexing only because I ran around all over the place. Some of it was news related, right? So, and part of being a trader really is just trying to get in alignment, not being predictive, because how do you know which way it's going to go? And, maybe eventually it does whatever you think it might do, but what is the path? And as day traders, we are concerned with the shorter term aspects of this. And then when it aligns with a plan, then you operate accordingly. But it will transition along the way. And we don't know if the market goes up first, then goes down, then goes up, or goes up first, goes down, and never goes up. This is the part of the thing. So in Trader Lab, at least what I work on and share with traders and what worked for me over many years of random behaviors. In other words, winning trades that don't have edge, because I didn't understand we're actually in a gaming business, not a business of being right or predicting anything. Because when I started early on, there were no off-floor traders. So it was much harder for me than it is for you. Your problem, I think, is that now you're at the other end. I had no information. You've got so much that you don't know how to sort it out. The only way to sort information out or ideas about trading is to actually vet them. That means taking the time to see if random behaviors have a statistical edge or if they're just random. Are you guys tracking? How we doing in YouTube? Remember, guys, if I drop out, this stream will be posted later. I'm in Costa Rica, a bit of a problem with the infrastructure. Also, if you're interested in Trader Lab, there's 60 PDFs of structured trades, the community, as well as a library of webinars on what you see here every day. You're all welcome. There is no cost. So this is the RTH open. Now remember the statistics, okay? 70% probability to get here. Okay, so and yesterday's high, approximately an 85% probability, which is up here, and the ETH high or low over 90% probability. So it's, for me, my idea for the day, that doesn't mean anything, it's just an idea, is to look for selling and then squeeze those guys out and take out yesterday's high. That was my primary idea. Now, how it comes out, who knows? So let's go take a look. And here's what I'm going to share today. And I try to do the same thing every day. I'm going to show you structured trades. Now understand, Trader Labs, an advanced trading process. What I do there and share is advanced. It is not your plug and play. You'll learn a lot of different things in Trader Lab, not just from me and the process I share, but from other traders. It's not about me at all. It's about the group and the leverage of the environment. You bring what you do, and it doesn't matter how long you've been trading. You know, you've been trading, if you're a new trader or if you've been trading or senior trader is over 50 years, I've got going on 46, you know. So, and again, all the benefit of time in is having gone down the same roads you have and had the same experience. We're all the same. The difference is, what do we glean from our experience? And for me, I kept doing the same things, trying to fix what turned out to be a defective process. I was looking for certainty and predictability, right? It's our nature as humans to want to avoid risk. And I know, and we don't think much about this, because we make decisions that we're not conscious of. We make decisions based on wiring. And I don't think we're really aware of it, unless we sit down and think about it and understand the mechanisms that come into the choices we make. Did you ever know or even think about your beliefs are based on, some of them are based on primal wiring, and that you don't have choices, that it's just a given? If you come into the trading business and you're not conscious of what drives you to make choices about your beliefs, you're already in a deficit. Just something to think about. RTH open. Now remember, the idea was open, go lower, looking to squeeze these sellers out and then take out yesterday's high. Or, and here's the or, because there's always anything can happen, or have an inside day and not take out yesterday's high and go in the park and wait for tomorrow. So there you go. Resting liquidity. Now, this is something I've been focusing on. I try to bring different elements in here. By the way, if you have questions, post them. I'll do my best. So, resting liquidity. Now, my thing for today was sellers early, and then I have statistical probabilities. What is the statistical probability? Overnight volume point of control, opening lower inside a range. And the overnight volume point of control is a retail price from the last auction, which is the ETH, 83% probability. So I come down here, this liquidity, look where it comes in here. This is the heat map, and it shows you the limit order book, adds, pulls. Now, a lot of this stuff is algorithmic and noise, but look at the difference between this and this. Just let's look. So right here, now the fact that this comes in, I don't know what will happen here. So I'm not telling you it's a red light, green light. If trading was that easy, we'd all go red light, green light and have an ATM in the basement. It's not. The behavior is random in the sense of, why does it stop here? Well, we know in hindsight, these sellers were absorbed. There's a buying iceberg. There's 35 sell stops. But until we come above these sellers in this liquidity, we don't know. Once we get above here, for me, it suggests possibility to come here. Because there's what? Was it an 83% probability to get here and the mid, and then I'm looking for it to potentially come out the top. Now let's look at this liquidity. Let's just see what it does. There's a target, and notice the behavior. Let's just keep going. Now, I am going to talk about structured trades, but I'm also going to talk about behavior. Now, the fact this happens doesn't mean anybody should trade it unless it's a vetted structured trade. So what do we have? Often, what I see, we all see, the opening trades. If I get sellers at the open, this is the opening swing high. What's at the opening swing high? Stops, right? So buy stops. Right there. There's the stops from the early sellers. Okay? Now what? The liquidity is right here. Would you think maybe those might be sellers? And where are they located? Right at the overnight volume point of control. So when I'm looking at this, I'm just telling you some things to think about. And you have to vet everything for yourself. Now here, no clue. There's liquidity. There's liquidity. Absorption, no clue. Microstructure. This is a structured behavior. I'm not going to call it a long. I'm going to say behavior. Buy stops are here, right? Location, location. Real estate, location. Why? If I see the buyers, I know there's stops here. This is just one element. And I see the liquidity comes in up here. Where might I put my scale if I was long? Right where this liquidity comes in. Sweep, buy sweep, selling icebergs, buy stops. This suggests either a short or a counter rotation. I couldn't tell you. Let's see what it does. This is a structured trade in TraderLab. Up to you, not up to me. Where does it come? Back here. I'm going to drill into this. Now, guys, I never know what your interest is, so I'm trying to show you what is in TraderLab. In other words, we all need to build trade plans, and there isn't one trade plan. There are traders in TraderLab who are going to get long and go to the gym. There's other traders in TraderLab who are only going to take shorts. And then there's other traders who trade both sides. It doesn't matter. In the end, it doesn't matter. Here's what matters. At the end of the day, can you extract an edge? In other words, you know where your trades are to give you a statistical probability. The other part of it is, can you execute it? You can't execute somebody else's plan. You can only execute yours. That's why when you go to quote chat rooms, and everybody visits chat rooms, I'll show you how to read this. Now, what I'm drawing here is what I consider a basic process to help you learn to read structure. I don't use indicators. I do use information, but I don't use your standard plug and play indicators. Been there, done that, don't need to do it. What I have found is I need to get an edge, and the way I can achieve edge is to use order flow. And what it does for me is I'm translating a language. This is the language of the participants in the market. So if you can learn to speak this foreign language, you don't need Google Translate. That is maybe not right, of course. By the way, being right or wrong is not the point in trading. It's always maybe. But with Google Translate, you're not going to get your translation until maybe over here. I'm processing this in real time. So I get my sweep. I have location, location, location. I have my liquidity. Look at the pieces. This sets up a sell trigger. Now, subject to my skill right here, because I already have my location, I have my sweep. These are all suggestions of going south. I can enter, if I'm advanced, in here with a stop over here, and you have to vet this, or I can enter on the retracement. These are structured trades. And I kind of shared these because initially, you need to extract edge and statistical probabilities. Once you get proficient at reading order flow, which is its own element and takes time, there is none of this red light, green light. It's not the way it works, in my opinion. You could be entering over here. But You could also enter here. I think that's acceptable, and your stop would be up here. And this is just something you have to vet. 1 tick under here, and I'll explain why, and 3 ticks over here. It's about a 3-point risk. Most of my risk on most of my trades is 3 points or less. And the less is dependent on my ability to read order flow and execute on a timely basis. But if you're a developing trader, you could work with this, but you have to vet it. The other part is you would already know if you have a trade plan that you're going to short this if you get a sell up here because it's the opening trade and the buy stops were sitting here. That is a specific structured trade in TraderLab. You can learn that. Just saying. So anyway, that's your short. And remember, we're thinking it's going to take out the top, yesterday's high. Well, where do we come back? So you have a short here. You have a short here. Okay? Anyway, just want to show you some of these. Now let's move on. I got to extend this out just in case we come back. I'm hoping that Bookmap is going to help us with a drawing tool here that just kind of keeps going. So I don't have to move these because I lose them, you know. So advanced, short, TraderLab, structured trade, short, stops are up here, right? South of the border. Now, let's look at this. Resting liquidity, sweep, counter rotation to there. There was a sweep here, back here, down here. These are structural rotations. You can learn this. Now, it doesn't mean you should trade them. It just means you can learn it. Now, sweep here, liquidity. Let's look at this. Liquidity, sweep, sell. So this is a sweep. Here's what I often see with sweeps. Now, often doesn't mean always, and this is not mechanical. Core, if you want to see the stats, go to, there's a link in the bottom of YouTube there. Visit the TraderLab. All that's available in there. Plus the 60 PDFs of structured trades and a library of webinars. So you'll get everything you need in there. Trade plans, contributions by everybody in the TraderLab. You know, it's a community. It's too much to do for one of us to sit out under a rock someplace. Trading is such a lonely business. So sell sweep. Now here you have a sell sweep. What does it do? It doesn't do anything. So that doesn't make it a long. What this does is, here's my liquidity. What's sitting over here? Nothing. Here's my sweep. Here's my liquidity. Right here is a possible cover. In other words, if you're thinking it's shorts, you're not going to be taking longs here unless it's in your plan. And I always have to say, unless it's in your plan, you know, we have traders in TraderLab that might take a long here. Other traders are waiting to take a short here. Is there a quote right or wrong? No. Because both trades can work. Where were the buyers? They were here, right? Where were the sellers? They were there. So support, resistance. Support, what do I get? A sweep. What happened here? A sweep. Where do we go here? Back across. Two-sided trade. Now, subject to your plan, you could just be trading one side, or you could be trading both sides, or you could be sitting here waiting. It's up to you. It's like waiting for a bus. Now, watch. Liquidity. Now, remember, for me, it was down first and then up. So when we got this, then it was going for this 70% probability to get here. So, you know, and we have a report coming out too. Cora, I hope I answered your question. Van Welden, I think I answered your question. You guys have other questions? Please give a like, by the way, if you're visiting in YouTube. And don't forget, subscribe to the channel so you get notifications when there's something going on, you know, so you don't miss out. Liquidity comes into the book, and this is called the initial balance high. Now, we have, and that comes in at, so you know, 9:30 Central Time. And there's over 90% probability to take out either the first hour's high or low, 70% probability to get here. Lovely. You know, now we come up here, liquidity comes in the book. Now, I want you guys to understand, when liquidity comes in here, it's not a mechanical process. The fact that this shows up doesn't mean the market will bounce off it. It can show up and then pull. And then, it's like a lid off a pot. At least that's the way I think about it, you know. So I don't know what's going to happen. Yeah. I don't want you to think anybody who pulls this, I know that. If you've been around for more than 20 minutes in this business, you know that's just nonsense. Because nobody can know. There's just too many variables involved. A tweet comes out of left field, somebody, you know, anything, and it disrupts. So we don't know what will happen. But when it comes in the book, it's very important to start observing behavior. What does this represent? This liquidity. It's these icebergs that are going off. So this is a stop an iceberg detector. I find it very usable. Not predictive, informational. So the more information I have, and now here's another thing. One of the things I get asked about often is, what about this stop an iceberg thing? You know, what do you do with that? Here's what I do with it. Because something I find, I'm a minimalist. So if I have something on my chart, it's got to contribute to my process, or else it's out of here. Because I don't want conflict. And most developing retail traders think more creates certainty. I found for me, because I went in that direction to the point of building trading systems, which were more on steroids, that it doesn't create certainty, it creates conflict. And I need to minimize conflict. I'm in a random environment. Do random inputs create certainty or more conflict? Well, I found for me, it didn't help me. It hurt. So as we're coming up, I have 62 buy stops. That's what this is. 33 selling icebergs. 30 buy stops. 8 selling icebergs. Liquidity in the book. 10. Now, let's talk about the one thing, at least, that I still use from indicator days, and that is divergence. If the market's going up, now the green bubble is delta. If I get higher something, which is aggressors, who are the buyers? Well, market orders, but also buy stops become market orders. They show up as an aggressor. So delta in a vacuum is not something you can depend on because you don't know what's creating the aggressor. It's just another piece. 10 buy stops. I'm going higher and I got less. 7. 1. Isn't that divergence? 26, 15, 14. So I've got my liquidity. I've got my selling icebergs, 91. So I've got more selling icebergs. My liquidity is staying in the book. I'm just isolating this for you. And less buy stops. So less buyers. This drops a little bit. This is pressure. I'm isolating this, and in and of itself, this should be studied and understood. Let's watch what happens next. Whatever it might be, I don't know. What happens here? They stay in the book. More icebergs, less buy stops. You see it? Just a little something. Call it a sidebar. Please give a like if you're visiting in YouTube. Support the channel, support the Trader Lab. Michael, exactly. Well said. So, this suggests the possibility of a counter rotation. After that, no clue. Let's see what happens. Mid, okay, VWAP. Now, I'm going to try to move along. I wanted to isolate this for you. And then we have our report at 9 a.m., right? So, for me, it was longs looking to come out and do the squeezeteria and take out yesterday's high. That is my primary scenarios. The issue, of course, as day traders is we can't predict how, if, or when. Now, this is our report, okay? Now, a couple ways to work with this would be when you have this, you get out if it's part of your plan. Or you sell, or you just have a trailing stop and you know, whatever you do, you do. It's not for me to say what you do because, you know, it's not about the best way to do anything. How do you build a trade plan? You ever thought about it? And why do we all build our own trade plans and not just rubber stamp and use somebody else's? Because we can't trade somebody else's plan. We can learn market mechanics, but we cannot replicate. So that's where the work comes in. It's kind of like dancing. You got to find your rhythm with the market. And there's going to be times where this doesn't make any sense. In fact, there are times it doesn't make any sense to anybody because of the randomness. But there are times when it fits into your plan. All the work is done outside of RTH. It's you bring your plan here. Casinos aren't making games up in the casino. Their games were developed elsewhere, and then they bring them to the casino, and then they play them exactly the same way. They don't control, and I always need to use this as an analogy. They don't control the cards coming out of the deck or how gamblers play the cards. They control how they play the game. We're in the same business. We're in a gaming business in a random environment. Something needs to be anchored. I covered this in my primer webinar. It's in the Trader Lab. There has over, 32,000 views or so. So I think it's pretty good. And it gives you an understanding of the business you're trying to be in. And the business you're trying to be in is not a business of being right or predicting. You're trying to be in a gaming business. Well, so all this idea of creating certainty and confirmation, in my opinion, should get thrown out the window because you're trying to solve for something that is not solvable. Instead, work on solving for operating in randomness. So this is our report. This is the Acapulco cliff dive. So this is where things got really kind of weird for me because I was looking at the longs. Now I'm going to show you an advanced trade. And I'm just grabbing these because I want to help you see some behaviors. This is resting liquidity in the book. Now, in a directional market, and you have to vet this for yourself. Hold on one second, guys. I got to look at something here. Okay. In a directional market, when we have resting liquidity, and you have to vet this, these are not trade recommendations. If I break through resting liquidity and I come back and check it, this is a potential advanced process. It is a short. Let me show it to you. I think we discussed this in Trader Lab. I can't remember. I think we did. Trader Lab, didn't we discuss this? This is advanced, okay? Now, initially, when you come to Trader Lab, if you want to develop a business, and that's what Trader Lab's about, career building, trade plans, understanding the business you're in, dealing with the psychological obstacles, which, believe me, are significant. Do not minimize them because you're going to have to push back against your primal wiring, which is to avoid risk. Well, unfortunately, we can't avoid it if we want to have opportunity. So it's almost like you got to jump out of a plane without a parachute. You wouldn't do it, would you? Your wiring would keep you, hopefully, from jumping out the plane. And even with a parachute, you're probably going to have a hard time. Well, a protective stop is like your parachute, yet we're paralyzed by fear. So we do other things. We look for certainty. And then if the market runs away from us, because now we're certain, we have FOMO. So it's always working against us. So we chase the market because now we're certain, except we don't have location, and that works against us. So when we have an optimal location, it's uncertain. Well, if you understand that it's always uncertain, then why wouldn't you execute the trade even though it's uncertain, when it gives you an optimal advantage? It's counterintuitive. It would logically says should execute at the best location, but our fear keeps us from doing it. And then our fear of loss, the next fear, gets us to execute in the hole. And then our risk is the greatest and we get stopped out. when if we could execute with discipline right here, either there with a stop up there or here on the retracement, that would be your trade. This is advanced. Anyway, I want to give you this idea so you can think about it. That's the whole point of Trader Lab, that you think, that you change, that you take your experience. I think of this experience as trapped equity. One of the webinars I did that's in the library at Trader Lab, it's called Trader Groundhog Day, and I think it's really important. That's when you keep trying to, fix it, right? And look, but you're trying to fix confirmation and certainty, so you're always really trying to fix your mental state by trying to be in a business you're not in, which is randomness. You're trying to create something that doesn't exist. Where's the optimal location? Here and here, not there. But think about it. Or once it does this and then it comes back, your fear says, oh, I don't want to get stopped out. You don't take the trade. Is that you? Trapped equity. It's all of us. All of us. No exceptions, because we're wired that way. So if that's the case, you need to solve for that. And you can learn how to solve for that in Trader Lab. Notice what happens down here. Now, here's the other joy of this. Here's the thing. And then I want to try. I got a bracketing here. Bracketing here. What this does, it skews the book. So, and now we don't know, this is the whole thing about liquidity. We don't know what'll happen. But here's what I know. Right here, I break below this, create something called the distribution, this outside edge, low volume node. And this liquidity comes in, it's pressure. This liquidity drops down, it's pressure. This liquidity comes in over here, it's support. I break below it. This liquidity comes in, let's just watch, and it thickens up over here. I have 219 sell stops coming out. Thanks for playing. Buy iceberg. See if this doesn't look a little familiar. I break above this, and there's my buyers. That's aggressive. Isn't that different? Now, this was aggressive. This is support. Sell sweep. Support. Support. Let's just watch it. Liquidity. Pressure. Support. Break. Pull. Support. Support. Absorption. 219 stops. Now let's watch. And this, remember the sayings, support becomes resistance, is here. Watch. Now this is not something I go into in Trader Lab. This goes beyond. And it doesn't mean this is actionable. What it means is if you were short, you would be looking at this if you're using a high-tier order flow tool, and you'd be going, now what? So for me, if I'm short, I manage the trade, and I'm clueless, not ignorant, clueless, because I can't predict anything. I can't predict if this will pull or what. But right here, the buyers take over, and I come over to this right here. Notice this comes in here, pause, break high, test. Now right here, no clue, break high. So this is aggressive. So let's see what goes on over here now. Notice what comes in here. 148 stops, buying icebergs. So let's try this again. So there. There. Now, the heat map does not stand in a vacuum, okay? Now, once we get our aggressors, then, and I've just found this, today was a little strange in the sense that the plan was open, go lower, then squeeze. For this, and then yesterday's high. So that was the plan for today, as you guys know. The fact that we went down first, then up, then down, that's just the way it is. There's just no way to know. So, and there's always those traders who say, oh, I knew it was going to do that. Well, come to Trader Lab. I always say, just be sure that you show us your trades, because otherwise it's just noise. So we come up here. Now these, remember the probabilities. 70% probability to go here. And then yesterday's high, about an 85% probability, which is over here. And then after that, up the food chain. One moment. I got to make an adjustment here. I don't really know where the market is at the moment, but that's okay. Hold on. Trying to fix something here. Hope you guys are getting something out of this. Please give a like if you're in YouTube. If I can get into real time, I'm going to try to jump into real time here. Now, structurally, once we get up into the higher time frame, if you will, let me show you some structure. I'm going to come back to that, and then I'm going to jump into real time here. I'm going to show you. So this is today. So what this is, this here, let me try to make this a little bigger for you. This is called a composite. And all it is when you have days that overlap, we put them together. So we can see the volume between the days. Something is very sluggish here. Okay, come on. So, hold on. My computer's, I'm on a laptop, by the way, in Costa Rica here. So things are a little, as they say, squirrely. Let me try to fix this. Okay, sorry. All right. So yesterday, this was the potential target, and it's called mean reversion. And this consolidation, which goes all the way back, hope I can get it all in here. This is the retail price for all of this. So that's why yesterday was a potential target. No clue, by the way, that it was going to come this far. No way to know. Now, if we put this day and this day together, what we're doing is we're looking at the volume between these 2 days. This doesn't exist yet. So when we look at these 2 days, and remember there's about an 85% probability we take out yesterday's high or yesterday's low, and considering that we basically checked this level down here, even though we missed it by a couple points, horseshoes and hand grenades, that's what sets up the probability of coming out the top. Then our next area, and this is very poorly auctioned up here because of the urgency. So when you have a poorly auctioned area, the market tends to return into it and fill it in. So the lowest volume, and by the way, the fact that any of these levels exist doesn't mean that the market is going to stop on a dime. It doesn't care. The lowest volume is right in here. And that level is, let me see if I can get this on here for you. I don't know if it'll work. This is Investor RT, and let me see. Exports levels to Bookmap for me. So I find that very nice. So 5697, 5700-ish is this in here. Now there's no precision, so it's an area to observe. Just want you to see where some of this comes from. And again, nobody knows. So I tend to do is I always work with levels, but I also understand that the auction, there's no precision in any of this. They're just areas, and the market doesn't care, And we are dealing with a significant fundamental event tomorrow. So remember at the top of the stream, the old buy the rumor, sell the fact, or in this case, sell the rumor, buy the fact. So let's come back here. And this is the level right here that I showed you. Okay, this is where all this comes from, the auction. Now, the fact that the high of the day is at the level, I'm going to say, what can I say? What I can say is I learned market profile from the guy who created I think it was 1985. No, maybe 1987. I can't remember. And I couldn't work with it. It didn't make sense to me. But over the years, I started seeing behavior or phenomena. And I kept thinking to myself, why does this happen? Why does this happen? Why does the market come to a level that's auction based? And the fact that it's there, I always say to myself, because I require it of myself. I'm not speaking to you, I'm sharing me, because you can learn from me and not waste time. You can do it better than me. It's not about me. It's about what I've learned and the mistakes I've made and the years I lost by trying to fit the market into a belief that wasn't appropriate or aligned with what the reality was. Instead, I found that the market has certain behaviors. Why was that little red line possible? Because of low volume. And the market comes up and checks an outside edge of a distribution. That's auction market theory. And again, random. I hope you're getting something out of this. Please give a like. If you're visiting in YouTube. Does this make sense, guys? Please support the stream. Support us in YouTube. Give a like. It's the only way this stream will continue. And nothing goes on forever. I am not going to be doing this indefinitely. When I'm doing this, I am not taking the trades I'd be taking. And I can tell you over the number of years I've been doing this, that is a substantial number. So I'm hoping that I can get some encouragement from you to do this a little longer. So please give a like if you're visiting. Are you guys with me? Is this helpful? If you want to support the Trader Lab, guys, give a like. I don't think it's too much to ask for. Let me know I'm doing a good job and you're getting a benefit. And we got to watch yesterday's high. Now, remember, this is a target. And again, clueless. Not important, by the way. The target could be this. Does it matter? Doesn't matter to me. I don't care about it. I care about is overall net profitability and getting a yield for the risk I take. We all take stops. If you're focused on trying not to take a stop, you've forgotten what a business is. A business is an opportunity to take risk for reward, whether you're operating a dry cleaning establishment or the trading business. There's overhead and cost of production. It doesn't matter. The difference in our business from other businesses is that we can get an immediate feedback. That's why a trade plan that is vetted, that you do outside the market. And many of us come to trading and we see patterns. And I think in Trader Lab, we have I think he's either a psychologist or psychiatrist, JJ Marks. I'm not sure. I forget. And apologies, JJ. And he gets deep talking about psychology and behavior. I'm very much on a more of a surface level, for the mere mortals among us. And we are all see patterns. The brain is wired to see patterns. Okay, we see patterns everywhere. You see them. I saw them. I still see them. And then we spend our lives, or for me it was years, working on patterns and complex patterns and multiple patterns because we see things work. And they all work. Everything works. And if you close your eyes and push the random buy or sell button, you're going to have winning trades, right? Well, because the mind sees patterns, we are going to spend time with those patterns. Or we're just going to start trading them because we're going to look back with our stochastic or MACD or something or whatever it is, VWAP, and at times it works. So now we trade it. But it may not have an edge. It does have winning trades. So the casinos have solved that problem. They only play games that have an edge, even though they still pay the gamblers. But they don't make games up. And just because a game they might create wins at times doesn't mean that it doesn't lose over time. Does that make sense? I'm passionate about this. When you've been trading going on 46 years, the reason I agreed to do Trader Lab and bring these ideas to retail traders is I lost years chasing something that doesn't exist, and that's certainty. I thought I could create certainty, and I did that with trading systems because I thought more inputs that were optimized would solve the problem. No, didn't solve the problem. It actually was just another manifestation of the problem on steroids. I just did it with more inputs. So at some point, after many years and many derivatives of processes, whether it's Fibonacci, Elliott waves, harmonic Fibonacci time cycle. I can go on and on and on and on and on. I don't remember anymore. I worked with George Lane to give you an idea, who created stochastics. I shared the office with him. I thought oscillators were the holy grail because look at that, the line crossed, and there you go. So, and for certain trending markets and certain time frames, it can be very useful. But for day traders, that kind of stuff just, for me, is not timely, and most of us tend to put on more things to create more certainty, and that's part of the problem. So I had to teach myself, and it was very difficult, to change how I viewed what this was and to change and remove indicators off my charts. And when you've had something on your charts for years, it is very difficult because we have a certain belief. We want to justify that, the saying, oh, at least I'll get something out of it. No, what you get out of it is what's the outcome. And if the outcome isn't good, tear it out. It's like weeds. Get the weeds out of your trading garden. Clean it up. Get the garbage out of there. Get it down to the minimum inputs so your mind is not conflicted. It's really important. And I believe that very firmly. And I've worked with a lot of traders over the years. I've sat on trading desks and I've mentored and coached many traders and trained traders for years. And everybody has the same problem. We're all trying to find certainty. And the question is, how's that working out for you? And Trader Groundhog Day is about the problem of doing a process or derivatives of a process that still has no edge. It's just doing more of the same. If you're not, and we all have winning trades. See, the catch-22 is you can have weeks of winning trades and still be a loser. And that's because you don't have edge. You have random distribution with no edge. And remember, the casinos don't play games that don't have an edge, even though they can play anything and still have winning hands. Think about it. That, in my opinion, is the differentiator. Please give a like. If you're in YouTube, if you're in Trader Lab, or you want to visit Trader Lab, please come to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. There's no cost. And you can join a community of serious traders. Where was our target? Is that predictive? Nope. Absolutely not. Is it random? Absolutely. Is it auction based? Absolutely. What does that tell you? Think about it. What does this tell you about what we're doing in Trader Lab? And can you do something with this? Let me show you another little piece. Watch. Now, what's important and again, I'm only talking about me. It may be irrelevant to you. If this is important and this is important, and I get my sweep, which sets up a short. Now, I get it here. If you took a short here, you might take a stop. You would take a stop. But where is this? Where's my location? It's there. If you're just not putting pieces together, you might be selling this, you might be selling this. And I'm not saying you shouldn't, because we all take stops. So let's get over it. Let's all be adults. Okay? It's overhead and cost of production. This is not a business of, I knew it was going to do this. I didn't know it was going to get there. But here's what I know. If I'm going to be taking a short, if I take it here, I have to be willing to take a stop. If I take it here, I know I'm at an auction-based level. I'm not dancing with the market in the middle of nowhere. And yes, you can trade this if it has an edge. My edge is here. There's my sweep. There's my liquidity. There's my selling icebergs. Here's my buy stop. See if you don't see something familiar. And it's random. But I'm going to show you something different. Right here, my jaw's on the table with yours because I don't know. Okay? Break. Now, let's come over here. What do we got here? See if this isn't interesting to you. This is advanced Trader Lab methodology. Resistance, break high, becomes support. Location, location, location. Real estate, auction location. You notice it's all there, level, high of the day, who knows. Sweep, location, location, location. Microstructure, right here. Microstructure, break, trigger. Where's my location to lean on? Right there. Advanced. Right here. Short. 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 Where to? Back to yesterday's high, back to the micro composite. That would be my target. And then trade management, not a recommendation. Now let's come back. Where are we here? Oh, another phenomena here. Let's look at this. VPOC migration. This is an important event. This is now the retail price. I don't know where I am here. I got to try to get back to this. Oh, okay. Here we are. So let's talk about this. This is outside of the first hour's high. This is the VWAP, and we have the full session VWAP. And this is going to set up a potential long mean reversion. It's not a trade recommendation. This trade is now a structured trade. It's in the Trader Lab. Let's give a like, by the way, if you're visiting in YouTube. Let's see what happens down here. Out here, there's two structured trades out in this area. Let me share them with you. And this is not a trade recommendation. All trades take stops. We got to get over it. So let's look now at the auction. How are we doing on time here? I got 20 minutes. So you got questions, throw them in the hopper, guys. Outside edge. Outside edge. This is called, here's the trades that are in this area. They are called the IB continuation trade, which would come, and here's the liquidity back there. The IB, so that's IB continuation, VWAP to VPOC, and outside edge, low volume node. So let me just turn a couple little things on here from Investor RT, try to give us a little peek inside the behavior. Let's just see if I can get this working. There's a lot of things you can do with Investor RT as far as exporting levels. Let's just see what we get here, if this helps us. Got to make some adjustments. Just give me a second, guys. One moment. Just trying to filter some of the noise out for us. Give me a little more time. Okay. And a little more. So we're looking for a long, and these are not trade recommendations. And if I run out of time here, guys, just be aware of these and you can observe them. I think we're kind of okay now. So these are the high volume nodes. They are aligning with high volume locations. You can see them here. And what these do is the low volume nodes, as they're called, basically are just bracketing these rotations or consolidations. And I can adjust the sensitivity. So I'm interested in out here, this area, because this is where I'm going to have a confluence for a potential long out here. Now, of course, it never has to get there, you know. So let's just watch, and let's watch the order flow, and let's see if we get here. So I don't have a structured trade until it comes out here. And this is a trade you can learn in the Trader Lab if you're interested in it. There's a double top. I'm getting hi, Elizabeth. Welcome to Trader Lab. A double top is the same in Bookmap as any other software. So double top, right? Now, double tops are weak structures. One of the things and I remember early on in my development, I learned classical bar charting at CME. We didn't have candles yet. It was really pretty much, classicals, measured moves, head and shoulders, all this stuff, and triangles, flags, pennants, right? So, and I just remember this. Well, a double top, that's a failure. You got to short double tops. Okay. And what I observed was they're weak structures. They're exhaustive structures, a double top. All it is exhaustion. Well, if you have a double top, and of course everything is random, but what I've found is double tops, the market tends to come back. And if you have exhaustion at a location, there's going to be stops over those locations. Because traders are, get short somewhere along the line, put their stops over those highs. So that's fine. But what happens when we come back? It's a weak structure. Intraday, we get also the same processes. So if I look here, let's just assume for a moment this is weak. Now, this is not a double bottom. But intraday, the reason they're weak is because day traders, trail their stops. So whenever I'm looking at structure, I'm going, if I was short, where would I be trailing my stop? Well, at some point, the market is going to counter rotate into the stops. Here's sweep, by the way. Let's look at this. Does this look familiar to anybody? Right here. Break low. We are moving directionally at the moment. What is this? Advanced Trader Lab. Sweep, short. Intraday, aggressive, not a structured trade unless you vetted it. This is a continuation, and it's very scalpy. It's not, and I do share these, but this is not something where you're sitting back in your Barca lounger. This is something you can use a couple different ways. Subject to where you think the market might go, you might take this as a continuation trade, or you use it for trade management. Is that logical? This is Trader Lab. You can learn this. Anyway, I hope I answered your question, Elizabeth, on double tops. You'll see them everywhere, not only in the RTH, but you'll see them intraday. So they all work the same way. And as you go down in time frame, and I don't think there's no time in my world here. To me, it's based on participant behavior. So the clock doesn't regulate this. It's the buyers and sellers. So right in here, I have a sweep. I have location. Now here I have the opposite. I have a sell sweep, and I have liquidity here. However, where's the stops? Think about this. Where's my stops? VWAP and mid, which is here. If I want to get long, would I get long in front of the VWAP in mid, where I know retail traders put their stops, or would I want to use their stops and look for exhaustion at a structured location? And again, it's not a recommendation. An outside edge, which is a low volume node here, and the old saying in real estate, location, 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 and stops out here for a potential long to here. That's a structured trade. Anyway, Hope you're getting something out of this, guys. And remember, it doesn't have to get here at all. But there is a probability, and it's a good one. I don't remember the statistic. Maybe Rod might post that or someone else in TraderLab, that when we're outside the initial balance by at least 3 points, there is a probability, and I'm going to make a wild guess, but somebody posted, I don't have it handy here in Costa Rica, there's about over a 60% probability, I think, to get to the volume point of control, but I don't remember. Does somebody have that stat handy in TraderLab? Yeah, you're welcome, Elizabeth. Please give a like if you're visiting in YouTube. Support the stream. Use the link in the bottom of YouTube. If you're interested in visiting the TraderLab community, there's no cost. Also, and this is something that might be one of the best kept secrets, and it is there's a lot of additional education in the Bookmap server. It's all available at no cost. Kind of mind-blowing, if you ask me. I mean, think of all the paid chats you guys have probably cruised through in your careers. And what have you taken away from it? Well, here's what's available at no cost. Large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic trading, market maker behavior, stops, icebergs, advanced order flow concepts, actual live narration of these things. The other part of it is there's something called, and nobody knows about this. I don't know why. There's a trader coaching and mentoring called Bookmap Academy. And in the Bookmap Academy, you actually can get coaching and mentoring from other traders with a lot of experience to help accelerate your growth and development. Now, this goes on, of course, every day, 24 hours a day in the TraderLab, with all different processes. And it's not about any one thing. It's the confluence of traders coming together to leverage their collective experience. This is what makes TraderLab unique. Also, it's not romper room. It's professional. And it's a respectful professional community. And like all communities, it's made up of personalities, and occasionally everyone gets frisky, especially when there's big, wide rotations. It's just human nature. But it is a serious community for serious traders. And it's currently available as long as I'm doing this, and Bookmap, of course, makes it available. It is no cost. Nothing is going to continue forever. And I can assure you I won't be doing this indefinitely. But I think if you can sit with me, like other traders have in the past on a trade desk, you can learn something that you might not have access to anywhere else. And then you take it and you make it your own. It's not about here's what you do and do this or else. That's not what this is. This is about leveraging my experience and the experience of other traders in the TraderLab, because we've all walked down somewhat the same roads, in a different fashion, different paths, but we all kind of end up in the same place. The difference is take that experience and leverage it and make it your own. And maybe before you run out of assets or run out of time, you can actually figure out how to sustain a career in this business and create longevity and maybe sustainability. That's what this is all about. So if that's important to you, if that's your goal, then visit the TraderLab. Now remember where we're trying to go. We're trying to come out here at some point, and our goal is to come back there. That's the trade. Now, doesn't have to do it, never has to do it. That's part of the joy. So, but this is called the mean. And if we can come outside, and again, this is location based, not just, we're out in the middle of nowhere here. And if this is not a structured trade for you, you don't have a trade. But this is the objective. It's called mean reversion. It is specific condition. You could learn this in TraderLab. And again, this is not a location. The location is down here. But what was this up here? The high of the day. That was a location. So you can learn this, and it doesn't mean, remember, this is trading, doesn't mean we'll ever get our long opportunity. And here's another location, by the way. You got to mark this right here. This high volume node. Let's make a little mark on this. And here's why. And I don't know where the market will go, so let's not worry about knowing because we can't. We can figure out where it might go, but we don't know where it will go or how it'll manifest itself. Let me make a couple more adjustments here. This down here is the high volume node. It's called a variable high volume node. I made the terms up when I first noticed this kind of behavior. This is a retail price. It was the highest volume. Remember, if you want to understand trading, it's not complicated. It's just random. This is shopping. The idea of an auction, which is what is going on here, is for the participants to try to figure out what's too high, what's too low, and what's fair. The current fair price is here. This was the previous fair price, and it's too low. So we left it. So the shoppers, think of this as shopping. Now this is the new fair price. If I rotate away from the fair price, I can return to it. That's called mean reversion. That's the mean. So if I come out here, this is too low down here. I can come back here. If I come out here, structured trade, which is the goal, to come out here, then the trade is to come here. And did I ever get that statistic as far as the migration stat? Oh, thank you. 67% probability under this condition that we might make a new high of the day at some point. So what do we have here? This was our target. And there's a 67% probability, past performance, not indicative future results. This is part of our data mining that goes on in TraderLab, that we'll take this high out. Now, will it? Remember, not 100%, 67%. If you have a 67% probability, here's the question. If we have a structured trade that's out in here, and it shows up, and you have a 67% probability of taking out the high of the day, and the trade is called mean reversion. It's a specific condition. If you got long out here, you'd be coming back here and then 67% probability to come out the high. And again, nothing has to happen. It's all random. How would that help you? Or would it help you in your trading? If it's a yes, use the link in the bottom of YouTube. This is why the TraderLab exists. Is this going to help you? While there's no cost, and while the TraderLab is still open, you might want to visit. And again, there's no cost for it, and you have to be thankful, I think, to Bookmap for making it available. And again, why would Bookmap do that? Now, let me tell you why Bookmap does it. They do it because if you succeed, they succeed. It's one of those things where everybody wins. If you succeed, they succeed. And where else do you get education like this at no cost? Everybody wants to put their hand in your pocket, right? And you've probably all made a lot of investments in your own education. And you have to reflect, in my opinion, what you've gotten for that investment. I call that trapped equity because you can extract value from your education, but you need to sort through what has value and what is just random. That's our catch, because everything works. I mean, if you threw something spaghetti against the wall, some of it'll stick, but it doesn't have an edge. That's our trader Groundhog Day, And if you're not familiar with that, you might want to come to the TraderLab. Check it out. 1 second. Gotta show you something here. Here's what the TraderLab community looks like. You can see this is what's going on. Charts, posts, statistics. Thanks, T, for posting that. And thanks, Rod, for doing the research on that. I mean, traders, he actually had to build his own software to extract these statistics. A lot of these are not out in the public space. But everybody shares in TraderLab. It's not like this, I have the secret sauce, Well, whatever that is. So, anyway, this is TraderLab. This is the community. If this kind of information you might find useful, come to Trader Lab. It's not about me. Believe me, it's not about me. It's about traders, helping traders. Okay. And this is what the library of webinars looks like. It's pinned at the top of the chat. Start here. And Ned, thank you for curating this. Everybody pitches in Trader Lab. The primer webinar, it's got about 32,000 views. You might want to drop in and look at that one. It's a high-level overview of what this is. Meet the Trader Lab. The Trader Lab's advanced trader education. I'm going to tell you, this is not typically what you're going to come across out there in the Ethernet world, if you will. And then watch this one. I planned, I saw, I traded. What this is about trade plan. In other words, before the market opens, already know what I'm going to do. I don't know what the market's going to do. Nobody knows that. So it's about anticipating behavior and then quickly adjusting to the behavior as soon as you recognize it. And it's done with conditional processes. And it's like, and it worked. And part of this evolved out of my building of trading systems. So a process or a thought process evolves, shall we say. So after I built systems and then threw them away because I just created the same problem of curve fitting, but I did it much better, but I didn't get a different result. I said, but the process is useful. So it works like this. If this, then that. If not, then what? So if the developing volume point of control is above the IB, so if this, then that, then what? Then if I pull outside its mean reversion, which trades are qualified in that conditional? So it's conditionally based. Then there's certain trades that are qualified. I have no trade until that specific trade or condition. So the condition has to be met, and then the structured trade is operated. And then either it happens or it doesn't happen. You can learn this right here. So trade plan. You need a trade plan in order to behave in a consistent fashion, not predict, but behave. Because it isn't one trade that makes or breaks your career. A career in trading is thousands of trades. But the only time you should be interacting in a random environment is when you have a statistical edge. If the trade doesn't show up, your job is not to trade, because then you're just a gambler. And if you're going to gamble, go to casino, get the cocktails and the ticket to the buffet. This is business. Day trading. Are you a gambler or a trader? Why traders using indicators fail? Why is the failure rate so high? Have you ever thought about it? I thought about it years ago. And I figured out, I'm a slow learner, and there was nobody trading off floor when I started out. Everybody was floor traders, all my buddies. They thought I was crazy because why would you do this? So I said, well, maybe I ought to get a membership. And I certainly came very close to getting a membership. CME. But I'm a little bit more of an analytical, so I didn't. Trader Groundhog Day. This is where you work hard and keep waking up in the same place. These are the ones you ought to watch. Use the link in the bottom of YouTube. There's no cost. Give a like. Support the Trader Lab. And Ned, thank you again for curating. There's also all these documents, 60 PDFs of structured trades, kind of core concepts to help you understand how you can begin building out the process. Opening context, trade plans, and it isn't just me, other contributions from traders. That's what the Trader Lab is about. Understanding mental obstacles and a lot more. And a lot of other streams. Please give a like. Thanks for visiting the Trader Lab today. Use the link in the bottom of YouTube. Visit the Trader Lab, and I look forward to seeing you guys there. Thanks for visiting, guys. Appreciate your support. And don't forget to give a like on your way out. And feel free to review this stream, circles, arrows, screenshots of things you found of interest. Vet all the ideas and things you see here or anywhere else. And I look forward to visiting you in Trader Lab. Thanks, guys. And thanks for visiting Trader Lab today. Look forward to seeing you tomorrow.